Let's go. McEwen Mining, New York, Toronto listed. Here's your safe harbor statement. You can read at your leisure. Our assets are basically broken down into two parts, a gold and silver portion and a copper portion. In terms of alignment with shareholders, I have $220 million invested in the companies, on 17%, and take $1 a year. We have 51 million shares outstanding, fully diluted, and you can see the shareholders, top 10 institutional shareholders on the left, on the right rather. We've improved our financials compared to last year. Our working capital went up to 92 million. We dropped our debt by 25 million to 40. We haven't had to go to the market to raise any money for McEwen Mining, but we raised money for McEwen Copper, and you'll hear more about that from Michael. Our cash gross profit has gone up, and we're producing a little more gold. We have a larger presentation, but because of the time frames, we're skipping through a lot of this. This is how we performed in the last year. Outperformed gold, silver, the Dow, NASDAQ, GDX, GDXJ. And that was largely driven by a move we took a year before to separate our copper asset from the precious metal assets. And it started in August of 21, where I put in 40 million personally to get funded, and I thought it'd be a piece of cake to raise the next 40 million. It took a year, and in August of 22, we closed on an $82 million financing. Rio Tinto came in, putting in 25, and then a group out of Australia came along. And after that, we raised some more money in February and March of this year, 30 billion Argentinian pesos. Stellantis, the fourth largest car manufacturer in the world, and they, for the first time any car manufacturer bought into a copper deposit. And Rio Tinto stepped up again. So the first financing was at $10 a share, second at $19 a share. We put out a PEA, updated PEA, in June of this year. And I think that the strategy to separate the two and fund it separately helped considerably. When we look at McEwen Mining, it's the sum of parts. There's the copper, and the midpoint is basically taking the last financing and coming up with an applied value of 550 million and dividing it by 51 million shares outstanding to get 560. And the other two, the low and the high, one is looking at Jose Maria that was sold in the province for 485 million, and Filo that runs around 2 billion. And then we have a royalty portfolio, 5 royalties, and our gold and silver, the midpoint is basically if we are trading at our peers, the low is at a 50% discount, the high would be a 50% premium. We're currently trading just below 7. This was Friday's numbers. So 3 assets in McEwen Copper. They are the Los Azules property in Argentina, the Elder Creek property in Nevada that's Kennecott's exploring right now, excuse me, and a highly experienced management team that Michael's put together. Pardon me. So this is McEwen Copper's ownership, and I like to look at it from a standpoint of I'm looking at a gold deposit. And so in the latest PEA, there was 37.6 billion pounds of copper, average annual cathode production of just over 400 million pounds of copper, and a C1 cost of $1.07 a pound. If you look at the current gold price and copper price and divide, it takes just over 500 pounds of copper to equate to 1 ounce of gold. So I look at this and say, well, this is equivalent to a 74 million ounce gold deposit producing 800,000 ounces a year at $545 an ounce. It's a project where the initial capital is $2.5 billion. It pays back very quickly in 3.2 years. It has a 27-year life, and we've only mined a third of the deposit at that point, and you have $2.7 billion NPV at an 8% discount and a 21% IRR. And Mike takes over from here.
Thank you so much, Rob. So I'm responsible for McEwen Copper. We are located in San Juan, a province in Argentina. We like to compare San Juan as it compares to Argentina to Nevada as it compares to the US. It's the most mining-friendly province, not only in Argentina. The Fraser Index ranked it highest in Latin America, higher than Peru, Chile, Mexico, and so forth. Of course, you have to deal with national regulations as well. So that makes it very important to have people in place that are able to manage through those obstacles. We operate in an environment where you have Rosemaria, Filo del Sol, Pascualama, Veladero, Altar, and El Pachón. Los Azules and El Pachón are top 10 in terms of resource size. Yeah? And we have suppliers that can actually build and operate a mine of similar size in San Juan. The Veladero mine is a mine that puts 28 million tons per year on the leach pad. We think in our PEA we estimated 17 million tons for the first 4 years, and then we go up to 40 million tons per year. So that's something that has been done before in San Juan. That's important. Just the PEA highlights. So the base case, Rob already alluded to, 27 years, a relatively low strip ratio of 1.16. We produce about 4 million tons of copper LME grade A. By the time we do that, we believe we should be carbon neutral. At the moment, we are in the lowest quartile. In fact, we are the lowest 10% in terms of carbon emission per ton of copper produced. That's due to the fact that we have access to renewable energy. YPF, the state-owned oil and gas company, made us an offer for the power as well as to do detailed engineering and to finance the line if we wanted to. Initial capital cost about $2.5 billion. Sustaining capital relatively low of $2.2 billion. C1 cost, Rob mentioned that, $1.07. All-in sustaining of $1.64. So we are well prepared to go through different parts of a cycle. Internal rate of return, 21.2%, net present value of about $2.7 billion, and a payback of 3.2 years. What is important in terms of our partnering? We have Rio Tinto on board as a partner, currently they own 14.2%. Rio, through its Newton arm, is a company that is focusing on copper heap leaching, specifically primary heap leaching. Our PEA only goes through 1/3 of our overall resource base, through the supergene mineral. If the technology from Rio Tinto works, we can use the same SX-EW, we can use the same leach pad with a couple of small modifications, thermal blankets, aeration, and we could extend the life of mine by 13 plus years and increase the NPV by 1.1 billion or more. Yeah? And why only 1.1? Because of this huge life of mine increase. It's because it's so far out. Yeah? We think about using that technology from about year 17. They have extensive experience. They are also active in Salta. They have a big lithium project there, so they're comfortable with the risk. If you see a map now of Argentina, you have all the mining names are now in Argentina. Then we have Stellantis as our other strategic partner. And Stellantis is important for us because they produce about 180,000 cars and they have 28,000 people working for them in Argentina, in Buenos Aires and in Cordoba. So we bring mining to the urban centers that are traditionally more reserved when it comes to mining activity. Those are voters, 28,000 families that depend on that and that will depend in the future on the copper generated from our mine. One of the biggest selling points, I would say, in the Stellantis deal was our focus on being carbon neutral by 2038 and being able to produce green copper. Not a lot of mines can do that. We can do that because of our proximity to a power line and YPF being able to supply us with renewables. There are other players in Argentina that can do the same, but we decided to go with YPF. This is just a quick highlight. How do we compare with Josemaria and Filo del Sol? in the same province. We have 2 reference points. Josemaria was acquired for 485 million in a private transaction a little bit over a year ago, and Filo del Sol is listed. Depending on time of day, it's somewhere between $2 and $2.3 billion market cap. How do we compare? Same province. We're about 1,000 meters lower in terms of altitude than Josemaria and about 1,800 meters lower than Filo. Why is that important? Because weather conditions, because of altitude causing problems for machinery, people. I mean, certain equipment you can only use to certain altitude because of lack of installation capacity, lack of cooling, because of lower air density. So when you compare our M&I, we're about 4 times bigger than Josemaria, with about 40% higher grade, and we're about 8 times bigger than Filo in their latest mineral resource estimate that came out about 4 months ago in their latest PFS. We're about 70 kilometers from infrastructure, a straight line to a 500 kV line and the provincial road. Josemaria is 244 kilometers away, and Filo del Sol 77 kilometers to Chile. When I worked in Barrick, I worked 10 years in Argentina, 7 of that in Barrick as CFO. I left the project with an energy line to Chile to be constructed. It took them 5 years to construct it and get it approved. So that's why we say we compare very favorably to Josemaria, and we would like to achieve a valuation similar to Filo del Sol. Just a highlight of exploration result. In gray, you see the pit outline of the 2023 base case, the 27-year life of mine. We have a couple of exploration holes that go to 1,000 meters. Here we have one hole. Left is north, right is south. That goes to 1,052 meters, 0.29% copper, including 480 meters, 0.42% copper. So there's a huge expansion potential of this already vast deposit. Another important point is to have a management team in place that know what they're doing. Out of the 10 managers that you see here on this slide, 7 are from Argentina. 6 have Tier 1, Tier 2 experience in San Juan. And we have 1 Mendocino. It's a good construction guy, though, so that's why he's allowed to work for us. Then we have Darren King, 27 years in Argentina on and off, in the Andes as exploration director. Dave Tyler lives actually 500 meters where I have my house in San Juan with his wife. So strong local commitment. We don't have any mercenaries. We have people that want to make this project happen. So our story. World-class resource, not in the hands of a major. Argentina is an upcoming Tier 1 mining jurisdiction. Robust economics through the cycle, as you have seen in the PEA. We are building a mine for the future. We have significant upside potential through Newton or others. We are backed by key strategic partners, and we have a highly experienced local management team. Thank you for your attention. Questions?
Thank you. I think we're at the end of the day, or the morning anyway. Thank you so much. Thank you, Robin.
Thank you very much, Doug.